Yes, boss. How is public? I hope you are doing well. Everything is fine, and your preparation for September 24 is going like anything. So, in the meantime, to support you in your preparation, we are starting from today our FMSM 100% exam oriented live mentoring batch for September 24 students as well as January 25 students. So, guys, I welcome you all to this batch. Let's have lots of fun. Let's have lots of knowledge sharing during this batch. And I have planned lot of things, and we have done lots of research for you guys so that we can make it a very big, you know, chunk of knowledge that we are going to get from this batch. So today, let's get started with the batch. So basically, I will be teaching you this the whole course in 120 hours. This is what I have planned. This batch will be 120 hours batch where I am going to cover financial management in almost 80 hours, including your case studies and scenario based MCQs and all the important practical questions that we are going to deal with it, including theoretical part also, because nowadays ICAI under the latest examination pattern is asking theories a little bit more. Say 12 marks theory was there in this May 24 paper. So accordingly, we have to plan for that. So I have taken into account each and every aspect of the latest examination pattern of ICAI, and thereby I am planning my batch for you guys. And as far as the strategic management is concerned, we are going to spend 40 hours. Of course, there is a discrimination that for financial management I am investing my 80 hours, whereas in strategic management I am investing only 40 hours, and that also including the case study and scenarios, where I have developed lot of case studies myself for you guys, so that I will share with you, will discuss, because in every term, in every attempt, we have observed that ICI asks some new question, and we have to deal with it very intelligently and very smartly. So guys, before I start, I hope so, and I'm expecting, and from you guys, and I would like to ask you also whether you have seen your study material. Yes or no? How many of you have seen your study material? I hope most of you have seen it, right? But my data says that 90% of the students don't see their study material, then they are completely begging on, you know, they are completely dependent upon the faculty, that the professor will send them the study material, they will go through that, and then they will keep on asking, sir, does your book cover uh, complete ICI mat, RTP, MTP, past year, and the cases and the scenarios that is going to come in the examination? Guys, this is where you are wrong. You should start investigating, you should start doing some R&D at your end. There is a possibility that your professor will say, yes, we have covered everything, whereas the book is old. So you will be cheated on that account. So I request every student that you should yourself see your study material once, and I request that today you are going to see, you are going to turn on pages of all the financial management and strategic management module. Especially let me introduce ICI mat to you, because I am one of the people who have written in past your study mat, so I know how the things work out. And ICI asks almost every question from its study mat. So guys, we have to cover our study mat like our Bible, like Quran, like Gita, like Mahabharata, like Ramayana. It's our holy book that we are going to follow throughout the course, especially in this exam oriented course. So as far as your study mat is concerned, your FM study mat is in two modules and covering almost 600 pages of financial management. However, your strategic management module is a single module having 250 odd pages. So you must be observing that there is a 600 page material for financial management and only 250 pages of strategic management, whereas as far as marks weightage is concerned, both are 50-50. There is no discrimination, but the size matters. And that's why we have planned 80 hours for financial management and 40 hours for strategic management. But it doesn't mean that both the paper has no rigor. It doesn't mean that strategic management has no rigor. Guys, there is a lot of practice required in strategic management as well. As far as FM is concerned, we are going to have lots of problems, like 500 plus problems we are going to solve during the class. But what about SM? So SM we will have to plan separate practice sessions, and there I will guide you through my mentor book, where you are going to cover at least 200 to 300 practical, case based and theoretical questions and straight questions that will come in the examination. So we have to put equal weightage of both the subjects. We have to give equal attention to both the subjects. As far as time is concerned, of course FM will take more time, SM will take lesser time, but SM will need rigor as well, as far according to equally as we will have lots of rigor in financial management. So we have to balance out, because every marks is important in our examination. I hope this is fine with you. So with this tone and with this commitment, that we are going to make a very interesting batch. As far as FMSM is concerned, every student of the class knows that financial management and strategic management is a very easy and interesting paper. Can't we make it scoring as well? Yes, sir. So my slogan is "Ab ki baar 90 par." We are going to, bet on 100 out of 100. Our target will be, the way we are going to study will be that we are going to achieve 100 out of 100. Rest, let the examiner, let the ICAI decide how many marks they are going to give us. But our target will be so high, like 100 out of 100. And I would like to have commitment from your side as well. So how we are going to run the batch? In brief, I will tell you that I'm going to cover the latest examination pattern. I hope you guys have seen your latest, May 24 first question paper that came under the new syllabus of FM and SM. I hope most of you have seen. If not seen, I will discuss right now, and I will tell you how this question paper is different. As you know, earlier there used to be 8 papers. And now in CA Intermediate, we have 6 papers. But ICAI is so particular about the rigor of the course that they are going to put 8 papers weight in 6 paper. You don't ignore this warning that I'm sharing with you. So follow me as far as this strategy is concerned, that ICAI is going to put 8 papers rigor in 6 papers. We have to be careful, and that is quite well observed in the latest question paper of May 24. How and why I'm talking like this? So guys, here is the question paper of May 24. May 24. Latest question paper. How is it different from other attempts? See, first of all, the latest it is very important that we understand the latest examination pattern, because our whole preparation, the whole batch will be run based on this. Why are we having this class in place? Why are we attending this class? Why are you watching me? Why are you watching me for financial management and strategic management? I know different people have different answers, but my answer as a student will be very simple. Sir, we have to appear in FMSM paper in September or January. So, sir, if we have to appear it, we have to write an examination of 3 hours, and that we want to make an excellent appearance. We want to write in these 3 hours, and we want to score 100 out of 100, as if we are giving first time, and we have to clear it. That's it. This is our main purpose, and that's why we are having this exam oriented batch. So guys, if you want to write it 3 hours examination, and you want to make your examination hall experience so nice, so beautiful, so interesting and excellent, then you have to understand what kind of paper will be in your hand in that 3 hours, and what will you do with that. So for that, we are going to discuss this. So guys, listen. As you know, your latest pattern is 70-30, where you have 30 marks MCQs, FMSM combined together. And in these 30 marks, you are going to have 20 marks case-based MCQs, am I right? And 10 marks general MCQs. So, during the preparation, your approach should be 100% case-based. In FM, in SM, we need to discuss lots of case studies from the industries, so that we are comfortable in the examination hall while attempting this 20 marks compulsory case study that we have to face in 3 hours examination. Number 1. Number 2, as far as our MCQs are concerned, they are completely based on concepts. So The success of ours in FMSM examination will be completely based on three things, and that is concept, concept, concept. As you know, any film, any movies, secret of success is entertainment, entertainment, entertainment. And similarly, the secret of success in CA exams, especially in FMSM, is going to be concept, concept, and concept. So we are going to rely on our concepts. And once we build our concepts, we don't doubt it on our concepts. So this is how we are going to run. So your MCQs will be totally dependent upon the kind of the nature of concept that you have learned and the kind of delivery you can make in the examination hall. So I am quite hopeful that you will follow the instructions that we are going to follow in the exam in the classroom. Next, as far as these 70 marks are concerned, these are completely descriptive and practical questions will be there. If I talk about FM, if I talk about SM, in FM we will have compulsory 15 marks question paper that will be compulsory. Similarly, in strategic management, 15 marks questions that will be compulsory. These questions will be of practical in nature, no theory, and here again this will be case based. So again, out of 70 marks, 30 marks is practical or case based. So again, our study should be very practical, case based, industry oriented. So combined together, 30 plus 30, 60 marks question is completely conceptual, case based, and practical. Do you agree with me? Yes or no? This is the brief analysis of our question pattern, the latest question pattern that ICAI has presented in front of us in the form of May 24 examination, question paper, right? Yes. And rest will be, A-B format. 5 marks, or 6 marks, 4 marks, or 3 marks, 7 marks, bifurcation will be something like that. So we have to attempt, 2 out of 3 questions, and that is going to be easy because we have a choice, so we can make a choice. But the questions are that the questions that have been asked in this attempt are quite different in nature. How this is different, sir? Number one, these questions are much of integrated nature, and this is first time I'm talking to you. Say there was a question on capital budgeting. Listen to me very carefully. What they did is, and why I'm discussing is, I will clarify on both. Say this treatment is from one question of our book only. This treatment is from the second question, one another question. This treatment from one another question, right? So it means ICAI did something very smart. They merged 3 questions, and the key concepts of 3 questions are made one question. This is integrated, question again. Earlier, we didn't see such kind of things. So here, this is something happening very special in our life, where we have to learn in an integrated manner, and any student who have good concept will face no problem solving these questions, these treatments. Otherwise, that person who has just mugged up the question or practice without thinking too much about the concepts, they will be hooked, and for them this paper was tough. But those people who are quite conceptual and they were ready for any kind of treatment that comes in front of them, and they are ready to solve that, those students will not face such kind of problems. So guys, this is the new ICAI. And second thing, though there is a 50 marks financial management question, treat it as if this is 60 marks question paper. You have to write 60 marks question paper and 50 marks as far as the previous examinations are concerned, because the questions that were asked earlier in 10 marks, now ICAI is asking in 6 marks. Just they reduced one treatment from here and they asked it of 6 marks, means quite possible at least this question must have been asked of 8 marks. So this kind of a smart adjustment has been done by ICAI. So we also need to be smarter, and I'm going to provide you solution for this, that how we are going to cater in a timely manner, in a time-bound format, 10 marks question in similar time that we are allotted for 6 marks question. Suppose for 10 marks question we get 50 minutes. For 6 marks we will maximum get 10 minutes. So how to solve a 50 marks question in 10 minutes? A 50 minutes question in 10 minutes. That smart strategy I will be delivering you during the class, and something we will have to work out, that how we are going to focus and we are going to capture this smart strategy of ICAI through smartness. Smartness can only kill another person's smartness, and that we are going to have in place. Second thing, similarly, They asked 5 marks question in 4 marks category. Similarly, they asked 10 marks question in 7 marks category. Similarly, this type of questions were being asked in 5 marks category earlier. Now it has been asked in 3 marks category. So how to face such kind of problems? How to face such lengthy question papers? We have to finalize a strategy, and for that I have done lots of research, and we are going to have in place while covering our financial management syllabus. So if you go to strategic management, again there is a section A. Of course, part 1 was your MCQs and case based scenario based MCQs, for which we are going to have lot separate session, a separate preparation strategy for that. Here section B is all about case studies. 5A, 5B and 5C, you can see integrated case based practical smart questions that we have to deal with, and this is compulsory. Earlier this compulsory question used to be of 5 marks, means you had only a compulsion to write 5 marks compulsory case based question and plus your 15 marks MCQs. So it used to be 20 marks compulsory question. Now that 20 has become 30. So now your preparation strategy must be such that you are ready to deal with 30 marks compulsory question, and that can only be dealt through conceptual knowledge of the paper, and nothing else is going to solve our problem. So we have to focus on this. So this is how your question paper will look like, and this is the pattern. And out of these 3 questions you have to write two out of this, and in third question of course you are having an extra option, or means you will be provided with 65 marks strategic management questions, out of which you have to attempt 50, and out of which 30 will be compulsory question. This is how your question paper will look like, and this pattern has been set by the ICAI, and now I feel for next 3-4 attempts the pattern will carry forward, right? So let's go back to our fundamentals and start talking again. So this was all about your question paper. Now, as everybody knows that ICAI questions are being checked on a specific marking scheme. Do you know that marking scheme? 90% of the students will say, no sir, we don't know this kind of marking scheme. We never come across any kind of marking scheme. So guys, I am going to give you a marking scheme while solving each and every problem, either of financial management or of strategic management. We are going to discuss about this marking scheme, where I will tell you that how step by step marking is being given, and which kind of, and at what places, what kind of care you have to take while solving the problem, and how to present the problem so that you can get 5 out of 5, 10 out of 10, etc. So this will be our second priority. Of course, your books, very interesting, quite good and smart books will be there. We will have financial management simplified textbook in 2 volumes, where we have 1000 plus solved practical questions, out of which 500 plus questions we are going to cover in the examination in the class itself. And I hope every question in the examination will come from this module. So this will be delivered to you once you start taking our classes. Second, sir, as far as your strategic management is concerned, there are 2 books. One is simplified. This is a textbook which is colored and very, very nice book. And second book is mentor. That is a question book with MCQs. Mentor for both the subjects are there. So there are MCQs, there are case-based practical scenarios, etc. And there will be a separate chart book that I have prepared, and that is under printing. So this will also be delivered to you guys. Chart book, very smart handwritten notes in the form of colorful charts will be delivered to you with these 4 smart books. So let's move to the next section. This is all about your books. Answer test series, that is compulsory. You have to attend our test series, where I will be sharing with you chapter wise test series from time to time, and there will be a one-stop solution batch on our one and only FMSM with Om app, where you will be provided with this, and my team will inform you. It will be over the mail also. So you can click, you can join in advance. There will be no charge. This is free of cost. This is complimentary with the batch. So test series will be there, chapter wise, and MTPs will be there at the end of the syllabus when you start revising your complete syllabus. And the most important aspect of this batch is this live mentoring session. This is a very new thing that I have started from this batch, because I wanted that every student should be in touch with me, and they should work for, and they should guarantee me up ki baar 90 par. This is what our slogan is, and I am preparing and I am delivering the class, and I want to prepare you for 100 out of 100 marks, so that we can really set a new milestone in the industry. For that, I have kept a provision of live mentoring where on weekly basis I am going to track your progress. I'm going to, yes, I am going to grill you. I'm going to take your report. I'm going to track your progress. You are going to ask your queries, and you are going to get plans for yourself, strategy for yourself, and you are going to have lots of interaction with me. Whatever is problems you are facing for your during your preparation, you can discuss with me, and you can get a live solution from me. That's why I've kept a live mentoring session for you guys. So this is all about the batch, and this is the pattern through which we are going to run this batch. Now moving forward, there is a very important saying that says, a slogan from a Chinese writer, the writer Sun Tzu, very popular writer Sun Tzu of some 340 BC, etc. The person who wrote a book called The Art of War, from where strategy originated in ancient times. So he used to say, victorious warriors win the war first and then go to the war, while defeated warriors go to war first and then try to win. So guys, I hope you understood that if you want to be victorious, win first and then go to the examination hall. Means you pass it and then go to the examination hall. Examination hall is going to be a formality for you, and for that you need to do lots of hard work before going to the examination hall. And then, but those people who are hopeful that in examination hall I will go and I will get, there will be some miracle for me and I will win the race. So that's not going to happen at all. So please don't be uh, reliant upon the destiny that you will come across in the examination, a very easy paper and you will clear the examination. I don't believe in that kind of things. That's why I'm giving you this slogan. You have to be careful. Chalo, let's start. So guys, have you come across this financial management, strategic management question, that why financial management and strategic management is there in our course? As a chartered accountant, what is the importance of this course for me? Say for accounting, we know that why we study accounting, right? In costing, we know why we study costing. We know in taxation, we know why we are studying taxation, because we have to plan tax. We have to do tax planning for our clients. But why are we studying financial management and strategic management? This is very simple, right? The simple thing is that I'm going to answer you through a case study. I hope you will enjoy it. A very important Reliance case. Say what a businessman does. A businessman has certain sum of money in his pocket. Say 10 Reliance Industries chairman Mukesh Ambani has 10,000 crore rupee in his pocket. He has reserve and surplus. He is going to invest in a fruitful project from where he is expecting to gain some return on investment, and from there the journey starts. To depict this, I have a very important video for you guys. Watch it and then we'll talk about a time machine that I have made for you guys. You see this time machine, and then we are going to discuss about this, how this time machine is working, and how a finance manager has an observation about this time machine, and how this time machine is producing profits for the organization, and from where the financial management is originating. So further, before we discuss more, let's have a look at this case study. Just watch it and enjoy it. I'm quite sure you observed what happened in this examination. Do you want to watch it again? See, there is a company called Reliance Industries Limited, and the CEO of that company is Mr. Mukesh Ambani. And let me try if I can write here. Suppose he has, no, I can't write here. So let me see if I can write here. Anyways, chalo. So say he has 10,000 crore rupees in his pocket, and he has, and I built a time machine for him. And this is the time machine. He entered into this time machine with 10,000 crore rupees. 10,000 crore rupees. Just try to understand what I'm trying to say and what I'm trying to discuss over here. So the fact is There is a company called Reliance Industries Limited. Now I am interpreting. And the CEO is Mr. Ambani. Of course, the finance is being controlled by a financial controller, and the CFO of Reliance Industries Limited is, say, for example, Mr. Damodaran. And Mr. Damodaran suggested Mr. Mukesh Ambani, sir, if you invest 10,000 crore rupees in a project, say project X, you are going to get a return on investment of 20% after 5 years, compounded annually. What did he say? Sir, if you invest 10,000 crore rupees in a project X, you are going to get a return of 20% after 5 years, compounded in 5 years, compounded annually. The first thing that he is expressing in front of Mr. Ambani. Mr. Ambani gets ready to invest and he rides my time machine as suggested by Mr. Damodaran. For next 5 years he is there, 23, 24, 25, 26. And of course, as it was told to him, the expected rate of return on investment was 20%. So how many rupees he gets after 5 years? Can anybody tell me? As I know, in CA Foundation, you have studied a concept in mathematics that is called TVM, where you learnt about the compounding. Two techniques of TVM, just I'm giving a brief because I know you know it. One is called compounding, another is called discounting. Am I right? When you have to compound a sum, what you do is a sum, say 10,000 crore, right, into 1 plus I to the power n. And here 10,000 into 1 plus 0.2 to the power 5. And this will be the sum after 5 years. So now calculate 1.2 into equal to 2, 3, 4, 5. Means you have to multiply it to 2.48832, right? This is your compounded value after 5 years. After, when he comes out of this time machine, he will be having altogether 24,883.2 crores. This is what he will get after 5 years. After 5 years, 10 crore after 5 years. So initially, prima facie, this looks, quite interesting project for Mr. Ambani, and he will say, okay, invest, but stop. He will not say like this. Think like a person of financial management. Being a financial management expert, neither the CFO will suggest nor Mukesh Ambani will accept this idea before interrogating further into it. He will say, see, Mr. Damodaran, this is the value of my initial investment. What is this? This is my initial investment. I hope you are understanding. This is my initial investment. This is my initial outflow. My present value of initial outflow is 10,000 crore rupees. I will get after 5 years 24,883. Suppose I have to, let's suppose I have to calculate it that what will be the present value of the inflow that I am going to get after 5 years. Can you tell me? Can you tell me what will be the present value of this outflow today? So to find out how much it will be after 5 years, what we did is we compounded it and we got a compounded value of 24,883, and that will be my future after 5 years. That will be my cash inflow. But Mr. Mukesh Ambani wants to judge it, wants to check it whether it is a beneficial project or not, whether this project is going to When I'm investing 10,000 crore, whether this project is going to increase the wealth of the company or not. What I'm saying, wealth of the company or not. I'm not talking about profit. Financial management is not about profit. Accounting is about profit. Financial management is all about wealth maximization. Listen to me very carefully. The further that I'm going to discuss next thing that I'm going to discuss with you. The subject financial management has two objectives. One is, you can write it, and before you write, let me tell you one thing. You have to prepare two copies. One copy, I didn't say about this, one copy for concept plus class practice. Whatever I solve in the class, you need to have concept and class question booklet separate, and one copy separately for your practice. Means this is your copy and this is my copy. You can understand like this. So here you have to practice, you have to solve your homework, etc., etc. So you need to have two copies. One is concept copy, another is practice copy. Okay? In financial management, right now I'm talking about financial management. So I hope you are noting it. Everything that I'm talking, you need to note it with me. And I will give you separate time to note also. I will give you full screen so that you can pause and note. This will be the, this is how we will run this batch. So there are, yes, I'm talking about financial management objective. Two objectives of financial management are there. One is called profit maximization. This is a short-term objective. And another is called wealth maximization. This is long-term objective. As you know, strategy is a long-term subject. Similarly, financial management eyes on the long-term growth and expansion of the organization, long-term viability. So this is wealth maximization is the core objective. It is the core objective, means primary objective, and this is non-core, or you can say secondary objective. In short term, every company wants profit. So accounting is also talking about profit, accounting profit. For that, we have accounting rate of return. We'll discuss in capital budgeting chapter. But and profit you are studying on daily basis. But financial management is deeply concerned with its wealth maximization objective. If I am going to invest, if I am going to understand like this, if I am going to invest 10,000 crore in a project, how much company is worth, say value or net worth, or say, listen to me very carefully, or say market capitalization you see on stock market. Go to any grow app and see it of any company. Say I am giving a homework, Infosys net worth, Infosys market capitalization, how much is there? Tata Motors market capitalization, how much is there? TCS market capitalization, how much is there? You should go and see, do this activity yourself. But yes, listen to me, I hope you understand. So the company's core idea is, by doing any activity or by investing into any project, apart from profit, of course I am eyeing on the profit on annual basis, but in long term, how much value we are going to create for the organization, how much additional wealth I am going to create for the organization. And that is something we are going to study more in this financial management paper. So guys, that's why I talked in this project about 5 years, down the lane. Today's 10,000 crore will of course give me some profit in this year, but after 5 years, it is going to give me a net cash flow of 24,883.2 crores. But this is the future value compounded annually at the rate of 20%. After 5 years, this is the value. Now, the second question is, listen to me very carefully. This 10,000 crore rupees has a cost, yes or no? Money is free? Bolo, yes or no? No, sir, money is not free. Money has a cost. And what is the cost of money? In financial management is a science of money. And it talks about the cost of money. Say I am giving you 100 rupees today. 100 rupees today. And I am offering another thing. Take 105 rupees next year. Which will you wait for 1 year to take 105 rupee, or you will take that 100 rupee right now? I'm sure you are going to bet on 100 rupees right now, because you know, if I get 100 rupees, I have an opportunity. I will invest it in some better project and I will earn 115 rupees. Are you getting my point? So any wise person will do this. But any money, either it is reserve and surplus, money comes from different sources. For any company, for any company, for any company, note it also, funds is required to invest in a project. And throughout financial management, we will listen this word quite often. In every question, there will be a sentence where we will be told that this much fund has been invested in a project, right? But this fund comes from which sources? So there is a source of fund. So say you have to spend something, what will you do? You have something in money, some money in pocket, something in bank, right? Something you take a loan from somebody else. So this is how you arrange money for yourself. And similarly, the organization or the company also requires fund, and that manages from different sources. And the sources could be either it can be reserve and surplus that you have already, that is called retained earnings, or you have equity, you raise money through equity, or you issue preference shares and you raise money through this, or you issue debentures, and you raise money through this, or you issue term loan, or you get term loans from bank and you raise money. So you have different sources of fund available to you, and different sources have different cost, isn't it? Because bank is giving you a loan, they will charge you something, say 12%. Debenture you are issuing, say at 15%. Preference share you are issuing, say at 10%. Equity shareholder is expecting 15%. Retained earning has also a cost, it is also not free, say 15%. So money is not free. Why? Because the cost of money is interest. Interest is the price of money. So note it. Interest is the price of money. Means if you have money or you want to take it, borrow it from somewhere else, you will have to pay a price, and that price is in the form of interest. Means the 10,000 crore rupees Reliance Industries Limited invested in Project X is not free. That has a cost. So what will you do? Now I'm giving a twist to your case. And further I will discuss more that how interest is fixed and how interest is decided. Here I gave you a hypothetical example, 15 say, for example, but this has also a science to fix this interest rate. Why 10%? There is not a logic. It could have been 8%, it could have been 10%, it could have been 12%. Anything can be done. But yes, there is a science that we'll discuss in later in other chapters, and we'll discuss definitely, and I will explain you how interest is fixed in the market. Of course, there is a demand and supply mechanism working behind this. So basic economics will work and you will understand very easily, right? So we'll discuss later. Now, so we are on this grid where today we invested 10,000 crore rupees, and at 20% of return we are getting to kitna tha, how much was there? 24,883. We are getting 24,883.2 crore. Now Mukesh Ambani knows that this money, the cash outflow that we initiated at the beginning of the project 5 years earlier, the time is 5 years, had a cost, and that cost was 15%, say for example. So of course they are going to expect it. So this is my expected rate of return, or I can say minimum expected rate of return? Say yes or no. As an investor, you will initially expect that at least my money's cost has been recovered or not. If something I get above this, if I get something above 15%, then there is a profit, then there is a wealth creation. Bolo yes or no? Tell me, yes or no? Yes, guys. So here you see that 20% you are getting a 20% return on an investment and your cost is 15%. Of course, your return on investment is higher than cost of capital. Technically, we call it a cost of capital that you have invested. If this is higher, it means there is a possibility, 100% possibility that you are going to increase wealth. And don't you think you should accept this kind of proposal unless until you have a better proposal in your hand? Tell me yes or no. Yes, sir, I will definitely go for this proposal. But if I ask you that how much wealth you are going to create, you are going to increase the wealth. This is for sure. This is how the data says. The data speaks louder than words. It doesn't matter how loud we are, but the data is much louder than us. So it is telling us that we are going to gain something. We are going to have an increased wealth, but how much? How much? So how will you get that? For this, you need to use the discounting technique, and will use in different chapters from here onwards. What will you use? You will use discounting technique of time value of money. Sir, is there a chapter of time value of money in our syllabus? No. So why are you talking at different places TVM? Is it relevant for us? Yes. How much it is relevant? Because in every chapter you are going to use TVM concepts. Without time value of money concept, your knowledge of finance is of no use. You won't be able to understand 80% of the syllabus without using the time value of money concept. So if you have revised well, if you want to revise, I have provided on in your course a separate lecture on time value of money and valuation of security. So everybody should watch before they watch further chapters, especially before watching cost of capital, before watching dividend decisions, before watching your capital structure, before watching your capital budgeting chapter. You must go through the time value of money and valuation of security chapter that I have already recorded and shared with you. So this is your responsibility. Now watch them and then proceed. Your life, your journey in financial management will be so easy and interesting, and you are going to score like anything. This is what I commit you. So guys, discounting technique of TVM. What the discounting says, what to discount and what rate. Sir, this is my return on investment. I compounded on this, and this is my expected rate of return. So I will discount this money at this rate of 15%, and I will get the present value of cash inflow. If I discount it, I will get present value of cash inflow, because this was my cost. If I discount by this, I will get the real value, the value today of this for me, because my expectation was 50. This is the bonus that I earned 20%. That's a good now. So that will increase my wealth. But how? Let's discount it. How will you discount it? So for discounting, you have a discounting factor. And how that works? That will be 1 by 1 plus I to the power n. Means here we have a discounting factor 1 by 1 plus I, 1 plus, 0.15 to the power 5. Now get it. 1 divided by 1.15, 1, 2, 3, 4, 5. And this is 0.49718. So how much decimal you should take? Ideally 4. You can take 5 also. You can round it off by 2. So approx you will get, so 0.4972 is your discounting factor. So now multiply 24, 4, 24, 883, 883.2 multiplied by 0.4972 into 24, 883.2 is equal to your 12371.4. This is your, you check it whether I'm correct or not. Approximately, I think I'm right. So this is your PV of cash inflow. So now you have two data. One, now compare it. One, present value of cash outflow, that is 10,000. Present value of cash inflow, that is 12,37171.4 crores. 4 crores. Now tell me how much wealth you have created, extra wealth you have created. So any layman, without knowing the concept of financial management, by simple mathematics and playing with data, will say that my inflow, if I do a versus, I compare my outflow with inflow, I will definitely find that I have a surplus 2371.4. What is this? This is surplus value addition. Surplus value addition, or you can say only value addition. Value addition by investing 10,000. So this is called wealth maximization. So you maximized your wealth by 2,371.4 crore, and this is the science answer. This is also called as NPV, technically net present value. Why this present value is called net present value? Because this is net of PV of cash flow and inflow and outflow, net of that, and this is something called wealth maximization, and this is the data which maximizes your market cap. Say for example, I'm taking a practical example in front of you. I'm going slow. This is the first lecture. Don't hurry up. Just watch me. Grow app. We are going on grow app. We are going on grow app. We'll have to, go yaar. Come on, guys. Yes. Thank you. And here explore Reliance Industries Limited, RIL. Reliance Industries Limited, you go. See the market cap. You learn this also. You will see here market cap. See. The Reliance Industries market cap is how much? 1 crore 97 lakh 60,000. No. 19,76,089. Let's write it. Very huge number. 19 crore, 19 lakh 76,086 crore. This is the market cap. And today Reliance Industries Limited decided to invest in Project X. And the finance manager projected this data. One, the cash outflow, of course, there cash, how much return is expected? 20% on this project. How much is the cost of money that we are investing? 15%. And by doing this, net concept of net present value, they found out that 23714 additional wealth we are going to create through this project. This is a projection. This is an estimation. This is a forecasting that we do, and this is the job of financial management. Looks into the future, and this is the job of financial manager. We always say accounting is history, finance is mystery, and to solve that mystery you need lots of logical brain and mathematical brain, and that is something we are using here, and we are finding that 2,371.4 crore additionally we will get. So immediately the market cap will increase by this, and the share price, market price of the share CMP, current market price, will shoot in proportion to this money. In proportion to this money divided by the number of shares, it will shoot up, it will grow. And this is how you see a reaction whenever a company invests into a valuable project or a good project. You will see next day the market will move positively. On a stock exchange, on BSE, NSE, their stocks will do better and they will rise on this expectation that they are going to create wealth. So now their market cap will be how much? Now just add 0.4, 7, 5, 4, 8, 7, 19. So now their market cap due to this project investment will be 19,78,457.4 crores. So this is the science behind which we are running. So you want to note, this is how this project will affect the finance of this company, and this is what your responsibility is, to forecast, to project, to work on the mysteries of different data that you have. This is the role of a finance manager. Your primary goal will be wealth maximization, market cap maximization of the organization, and I hope you will do it very smartly and very diligently. So this is all we are going to study in this paper. As there are case studies, that's why I'm discussing like a case. I will also discuss another case. Before that, you please write it down, put on paper. What you have to write is, we started from here, right? So take a note of this page. Please pause it and please, pen it down. Pause it and note it. Then pause this second page and note it. Then pause this third page and note it. And further, you have one more page to note it down, and the real case started from here. So pause it and note it. Let's move forward to the next case. Please pause and note it in a sequence. So chalo, let's move to the next example. And another case study I'm going to discuss, and this is the latest news. I heard it yesterday. It was in the Business Today, that Tata Motors, Tata and Sons are going to invest 43,000 crore rupees in financial year 2025. Majorly, they are allocating in Jaguar, Land Rover, and part of money in Tata Motors. Means in automobile industry, they are going to invest 43,000 crore in the market. How this investment proposal in this automotive industry is going to impact the decision of a finance manager, as a financial expert, as the CFO of the company, as the finance manager, the finance student, how you observe this question, how this observe this case study or this situation. So in my opinion, what I will do is, as a financial expert, as a financial manager, is I will first think about two things. Number one, I will think that how this money has been arranged. What is the source of this fund? Of course, I will check it from the data, that if suppose this money has been borrowed from the bank and the lender has given us this money at the rate of 12%. So minimum return that I'm expecting on this project as on behalf of Tata Motors, Jaguar or Land Rover is at least 20% I am going to recover. If I can recover 12%. If I can recover 12% out of this project, in that case, my present value of cash inflow will be equal to present value of cash outflow, right? So that I can recover the money that I have to pay to the lender. This is the first thing that I'm going to do. And whatever additionally I get, that will be my net present value. So far we have understood this. Or that will be my wealth. That will be the portion of my wealth maximized as of today, isn't it? Do you agree with me or not? Tell me through this case. This is how I am going to observe this news in Business Today. This is how I am going to see this. Say, from this I have my observation, and that I am keeping in front of you. Say what my proposal as a finance head is. Tata Motor investment proposal in these automotive industry of 43,000 crore is nothing but a cash outflow. PV of cash outflow for me, that is 43,000 crore. Now, so this is cash outflow. Now, I'm expecting that in year 1, I'm going to get 10,000 crore. In year 2, I'm going to get 20,000 crore. In year 3, and this is how your sums in the examination come in front of you. Year 3, I'm going to get 15,000 crore. Year 4, I'm going to get 12,000 crore. And year 5, I'm going to get 10,000 crore. And my expected rate of return, my expected rate of return will be nothing less than 12%, because I have to pay this money to the lenders, the money that I have borrowed from. So how I'm going to judge whether this project is good project for me or bad project? How I'm going to judge as the CFO of Tata Motors or Tata and Sons whether this project is viable for me or not? So the basic principle, the very simplest thing that I can do over here is, if I have got years, you have got the cash outflow, and if I have got terminal flows, intermediary flows of T1, T2, T3, T4 and T5, I am going to simply discount them as what will the value of these money today. So how will I do that? There is a very simple technique called discounting will be used again. And for me, the rate of discounting will be of course 12%. How I am going to discount it? So for me, this will be 10,000 upon 1.12, done. This will be 20,000 upon 1.12, 1 plus 0.12 to the power 2, because this is T2. Now in T3 it will be 15,000 divided by 1.12 to the power 3. In here 12,000 divided by 1.12 to the power 4, and here 10,000 divided by 1.12 to the power 5. And I have to discount in and get the present value of all the cash inflows. So now just calculate the present value of all the cash inflows, and this is your homework, PV of cash inflows, right? So the first will be 10,000 divided by 1.12 equal to, so that will be 8,928.57, done. Second will be 20,000 divided by 1.12 equal to, that will be 15,943.87. Approx we can do, but no. So this will the value. Third will be 15,000 divided by 1.12 equal to, that will be 10,676.70. Now 12,000 divided by 1.12 equal to, that will be 4 times 7626.20. Now and the fifth one, 10,000 divided by 1.12, 10,000 divided by 1.12. I'm just discounting it, or you can divide it by discounting factor, 1 by 1.12 to the power 5. There are both the ways. So equal to 1, 2, 3, 4, 5. So that will be 5674.30. Now add them. Now get a net of this. Means 43,000 minus whatever, you will get the either a surplus or a deficit. If you get a surplus, means if you get a surplus of cash inflows, means you are going to increase the wealth, and this project is okay for Tata Motors. They should go ahead with this. If this is minus, they are going in minus, it means this is not viable. This project is going to minimize their wealth and thereby affecting their net worth of the business. So in my opinion, if I add this, I am going to get something surplus, and my NPV will be more than 0, and I am going to accept this project. I'm not telling you, I'm not giving you any subject, any chapter's name. I'm just simply giving you a layman's example. If I'm going to invest my money in a project or in an industry, by doing lots of due diligence and by studying the industry and by preparing and through a strategy, of course there is a big expansion strategy behind this decision to invest 43,000 crore in automotive industry by Tata and Sons. If they are deciding and they are preparing a strategy for them, so of course there is a data to support that, and that data is this one. That why this project? Why not in another industry? Why not in petroleum or petrochemical industry? Why are they investing in electrical vehicles? Why they are investing in motors, automotive industry? Why they are investing in retail sector? The reason is very simple, that their wealth is getting maximized in that industry. And how that is calculated, how that is projected, how that is forecasted, how that is studied by the finance manager. This is how we study any situation in the financial management. So this is how you are going to deal with it, and this is how ICAI is going to ask case-based, scenario-based questions with you. So now I am talking in bits and pieces. We always say small milate jao, large banate jao. We are getting a journey from small to large. Many micro steps will become a macro step tomorrow. So this is how your case study is built, and this is how we are going to approach the syllabus. And that's why before telling you how many chapters are there, before telling you how much time I'm going to invest in each and every chapter and what are you going to study in that chapter, I talk to you the basics of finance, and with the help of TVM, and with the help of net present value, and with help of investment and source of fund. Because whenever we are going to invest, we have two things in our mind. We have two things in mind. Any business needs fund first, and for that they need source of fund. Because without capital, without sources of fund, without fund, they are not going to. In financial management, we are concerned with these two things primarily: fund, source of fund. And whenever we are having a source of fund, listen to me very carefully, this is the fundamental. There is a cost involved to this. This is called as cost of capital. Either it will be through preference share, or it will be through equity, or through reserve and surplus, or through debenture, or through term loan, or through bank loan, any format, or there is some bond issue. Whatever we are going to do, there is a source of fund that is called a source of, or there is a financial institution, or there is a foreign financial institution, they are going to provide us money. And for that money, they are going to charge us some price, and that price is the cost of capital they are going to get out of from 8% to 15% to any money, or it can be 2% as well, it can be 0% also. It depends, but there is a price of money. So that is source of fund that any finance manager is concerned with, that which source of fund I should choose. So just tell me which source of fund we should choose. We have four options. I'm giving you four options like KBC. One is 8%, one is 9%, one is 10%, and another is 12%. Tell me which source of money you will choose. Source of fund you will choose. Of course, the lowest one. We are going to optimize. We need to have funds which are at lower rates. The lower is better. For me, I would always use a fund which is at lower rate. Lower is better. I will go and bargain. I will negotiate for a lower rate. I'm going to take a home loan. I will go to the bank which is offering me the lower price. So this is the battle of cost of capital, source of fund. It should be cheaper. Nobody wants costlier cost of source of fund. Another is, once we have source of fund, say this is Reliance Industry Limited. We are going to invest the fund. And now you will ask, sir, where will you invest the fund? Sir, we have two options. One is, I'm going to buy fixed assets. I'm going to invest in some project. I'm going to invest in a long-term project. I'm going to have some, contract. So, or I am going to invest in the form of investment in the market. Money, I am going to use it through these things, either fixed asset or investments, or I need working capital. Bolo yes or no? Working capital. Do you need working capital? Current asset minus current liabilities. You need to pay your current liabilities. You need to have your current assets as well. So you have two responsibilities. One, invest in a project or in a contract or in a fixed asset or in an investment proposal, or you need working capital. So this is the basics of finance, and from here our syllabus starts. Already you are into a syllabus through two case studies, right? And this is how you have to study the paper, and then only you will understand that modern curriculum, the new approach of CA intermediate, how the question is being asked. It is not ratify questions. You have to understand the concepts, and then you have to deliver. Now, my dear friends, these are our chapters that we are going to study. Last but not the least, now I am going to talk about the chapters. So, sir, first chapter will be our scope of and objective of financial management. I'm going to take one lecture, 90 minutes. It's a very small chapter, and second is types of financing. One lecture, 90 minutes. You don't need more than 3 hours and 2 lectures for this, because these are the theory lectures. And we are going to study them in the last of the, when we complete the syllabus, we are going to study these 2 chapters. And reason is very simple, that most of the things that we are going to study in those theoretical chapters will be covered over here, from 3 to 9. So third chapter is your financial analysis and planning, that is ratio analysis, that basics you studied in 12th class. Now you are going to get some advanced version of that. And this is an independent chapter. This is a non-standardized chapter. And here we are going to blindly follow the ICAI. I will spend 5 lectures of 10 hours. Then cost of capital, a very important thing, because you have a source, you have a cost of capital that I was discussing. So how to calculate the cost of capital, we'll discuss into that. Of different sources of capital, we'll discuss, and how to calculate the cost of different sources of capital we are going to learn in this chapter. I will take 4 lectures and 8 hours max. Fifth one is financing decision. Sir, capital structure means which capital structure, debt or equity, which one to follow, which is going to maximize my earning per share, which is going to maximize my market price of the share. So to decide that, we are going to have this chapter of capital structure. I will spend a very important chapter. I will spend 6 lectures, 12 hours. According to the weightage in the examination hall, I am going to focus on the chapters. Then there will be financing decision. Leverage means if we increase the debt or equity, or if we put in more debt, how much impact is going to be on our sales or on profit or on EBIT or on our earning per share. So this is something we are going to study over here. Leverage impact. Investment decision, right now we did some snapshots of investment decision in these 2 cases. Which project to evaluate, which is beneficial, which has better NPV, net present value, which has better accounting rate of return, which has better payback period. So which IRR is better for the company, with which rate we should go, which proposal to accept, which machine to replace. These kind of decisions we are going to take into investment decision. I told you, one is financing decision, another is investment decision. So sir, these are the 2 parts. And third one, the most important one, is dividend decision, a very small chapter. Investment decision, a very big chapter, very important. And marks, there are marks is also, examination papers are also much oriented towards investment decision, because 10 to 12 marks weightage is there. 10 to 15 marks weightage can be there in the examination paper for this chapter. Dividend decision, a small chapter, 4 to 5 marks question will be asked from this, and that there we are going to spend 2 lectures of 4 hours max. And as far as working capital management is concerned, this is a very lengthy and hot and big chapter. Again, 10 to 15 marks weightage for this chapter I will recommend, and 8 lectures and 16 hours I'm going to spend in this. So overall, in 80 hours, 78 to 80 hours, we are going to complete the whole syllabus of financial management. This was the brief. And as far as other chapters are concerned, these 2 chapters combined together has a weightage of 5 to 6 marks. Again, financial analysis and planning, I can say 5 marks straight. Cost of capital, 5 to 7 marks, including MCQs, and sometimes 10 marks also. Capital structure, again 10 marks. And sir, leverage decisions are 5 to 7 marks. This is how I'm going to divide these chapters on the basis of marks and the question paper and the latest pattern given by the ICAI. So this is how we have to put in our credit and weightage in the preparation. So my preparation strategy will be very simple, and that will be based on the credit that is allotted to each and every chapter. Accordingly we will focus. We'll go by with a sequence. Like our sequence will be, initially will cover of course cost of capital, then we'll go to capital structure, leverage, etc., then investment, then dividend, and then working capital, and last but not the least we'll study ratio analysis also, and then theory. Why ratio analysis at the end? Because most of the ratios that we are going to cover in these chapters will cover in these chapters, so that when we come to financial analysis and ratio and planning part, ratio analysis part, this chapter will be quite easy for us, right? So my focus will be to make your subject easy and simple. As my slogan says, let's simplify it, let's make it easy. So guys, this was an orientation lecture for your financial management. I discussed simply the fundamentals. I simply talked about the batch, how we are going to run this batch. I simply talked about the syllabus. I simply gave you a flavor of case study, 2 case studies. I simply gave you a flavor that how your FM subject will look like. I simply gave you the relevance of data and the interpretation and the analysis, how you are going to do. And I talked with you some preconditions that you must understand before starting the subject financial management. So from the next lecture, we'll start chapter of cost of capital. And in the meantime, I will request you that you cover your time value of money and valuation of securities chapter. That is not there in the syllabus, but they are present everywhere. So separately, I have provided video lectures, and those are must watch video lectures for you. You watch them and then only start cost of capital chapter. I wish you a good luck. So I hope you enjoyed the lecture. Please put in a comment, like the video, and share with me your all the information, all the queries whenever it is required. And the last but not the least, one thing that I was missing, you will have to make a promise before you start the syllabus with me. And there are 5 promises that you have to keep, and you have to WhatsApp me before you start you know the first chapter of your life with me of financial management. And those 5 promises are here on board, so just listen to me. The first promise that you have to make is you have to keep a consistency to watch the lectures. So you have to give 100% attendance. When I am talking about 100% attendance, means 100% attendance. Whenever you are watching it, on Google Drive, you watch one lecture at least daily. You complete your homework on daily basis. You talk to me. You send your queries whenever it is there in the mid of the lecture. So say you are watching lecture number 4 of cost of capital, and you have a query at 2 hours 13 minutes. You just pause your video, send me the query, and then proceed further. But watch one lecture daily. Keep a discipline. This will give you 100 out of 100 marks preparation strategy. Work for 100 out of 100. Nothing less than this is accepted. 100% delivery of homework. You will have to ensure that whatever homework I am giving you, you are going to deliver it with me. Don't do nalaiki, please. Chapter wise test will be provided to you over FMSM with OM app. You have to attempt each and every chapter wise test, whether you have hit it 80%, 70%, doesn't matter, but please hit it with me. And the last, please promise me that you are going to have no shortcuts in financial management and strategic management. My next lecture will be on strategic management, and initially before the books reach you, I will start strategic management, so that because in finance we need to have book in our hand. So when the book reaches you within 3 to 4 days, we will start financial management properly. And in the meantime, for next 3-4 days, we'll continue with strategic management. At least we will complete one chapter, so that you will be also easy. So we will run both the papers parallelly. We'll not do one after another. Strategic management and financial management will go hand in hand. And my belief is that we have to put in equal importance to both the subjects, because both are of 50 marks. So none of them is better or worse or this or that, inferior or superior. We have to keep equal weightage, because ICAI has kept an equal weightage. We have to score in both the parts. Most of the students feel that strategic management is a theoretical paper, so ICAI allots less marks. Whereas some feel that financial management is a practical paper, so there is a chance that we will get 50 out of 50. Mark my words, my dear friends. My students in the class have scored 40 plus in FM and 40 plus in SM both. So I have a very good understanding. I have a very good experience with these two papers. Up to 48 students have scored in strategic management. I will show you the ICAI certified copy in the next class. And in financial management, of course, they are scoring 50 out of 50. There is no doubt about this. But my wish is that we give equal importance to both the subjects, because every marks is important in your CA journey, and we have to grab each and every opportunity that is there in the examination hall. So guys, you will write your 5 promises on your phone. Just pick up your phone, and this is my number, and this is the query number through which you will be registered to a WhatsApp group also for query support. So guys, pick up your phone, and just type these 5 things and just messages to me. I want to see your messages. So this is 5 promise that you have to keep with me throughout the batch, and I'm going to bring in lot of fun in this batch, and lots of knowledge, lots of wisdom, lots of R&D. I'm going to do lots of R&D for you. So you are watching FMSM with Om. See you in the next class. Bye bye. See you. Thank you.